Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon, all. Ira Epstein of Linder & Associates with your agriculture update for this Super Thursday, June 8th, 2017, 1:45 p.m. Central Daylight Time. It's Super Thursday because we saw the European Central Bank announcement this morning. They're holding rates steady. It's really a nothing event. It's pretty much as it was. We're looking at the dollar starting to fall and go for, not dollar, the stock indices making new lows after we've seen ex-FBI Director Comey's testimony. I don't think there was anything mind-boggling there. And tonight we get the UK election results and don't know where they're at. But as you look at the currency markets, they're basically lower across the board. They're nowhere near the day's lows that they were earlier. The dollar rallied and has given up some of those gains, but it's still in fairly good shape. Metal markets sold off as you'd expect, because what the trades did today is you had safe haven buying, think about it, for the past 10 days in the gold market, the silver market, the dollar to the downside, euro to the upside, and the yen. And everything that was that way has reversed course as those events are now coming to an end and the market looks elsewhere. In the grain market, it's pretty interesting action. You tried a good breakout, and you've done so in the corn market, but you only closed up a penny on the day. Even the bean market up 7 is a big number. It's a breakout, and you'll see that. And the meal market acts good. So we've come up. The question is, can you stay up in these grains? And the reason is we've got big crops looking at us coming. We've got a big southern crop, South American. I don't know how long you can keep that rally going. You know, the warm weather's returning. The dry conditions are returning to some parts of the country too. Going to be interesting. In the bean market, as you can see, you went from 980, 909.5, and now you're up to 938. So we're approximately 30 cents off those lows. Is there enough momentum here to keep going and clearing that high? I don't know, but it doesn't look like it's on the chart there. When we take a look at a daily area chart of only closes, you've gone from 912.25 to today's close of 938. Okay, so you've had an overall rally of 18 cents. It's not a big rally, but it's there. When you take a look at how the charts look, well, this has come up very nicely, but this type of pattern often bothers me. It's not the type of pattern where you get sideways action to support a big break or a rally off of that. These are more reactionary patterns that I see on charts. The swing line admittedly is higher. Higher lows, higher highs. I then place the 18-day average of closes on it because that's what I call the line in the sand. What moving averages do is they give you, obviously, an idea of two things. Number one, a key point on a market, depending on how far back the average goes. They're not forward-looking items. They're backward-looking items. They count on 18 days going back, and that's the average price of that. When you look at that, that's a moving average of closes, of the closing prices. When the market's well under it and it comes up to it, it's often a resistance point. When the market is above it, it falls back. It's initially a support point. But more important than even those, this is where numbers start and new trends develop from. If the market's going to keep going up, it's got to start closing over that and add another leg to it. It's got to get away from the number. So far, this is a very nice short covering rally. It's got the swing line up, but because you closed under the 18-day average, the two fight each other and you have nothing in the process. In the Bollinger Bands, as we rode them to the downside for the big break, they eventually moved and you're back to the sideways number. Now, I want you to think of if your kids or if you ever played a pinball machine and you shake it up and eventually it tilts and you hit a reset button. The reset is when you hit the 18-day average. Everything activates on the resistance, support zones, and that's how I teach to use that. Momentum-wise, you lost the embedded reading 2 days ago. Here we are on Tuesday. Wednesday you lost it. When you lose it, you often go to the 18-day average of closes. That's where you regroup. That number is 940 and 3/4. Now it's 39.5, and it's exactly what it did. You are still in an oversold condition, so the market does have upside momentum until it works that off. Meal market did the same darn thing, went to the 18-day average, and it's sort of stuck there. And now, when the market reopens tonight, you won't be oversold anymore. That 29.39 number, the way the math works on this, will jump a little bit, and it'll take you over 30, and anything over 30 is not oversold. That doesn't mean it won't come back down later and do that. In the soybean oil, you lost your embedded reading. Just lost it. You haven't gotten up to the 18-day average yet. I think you'll get up to that number, and that's where that game will restart. But it's not a trend. You've got the trend in the swing line, but why I say it's not a true trend, you're still under the 18-day average. The two are fighting each other. Let's go back to the meal. The meal does have a more or less true uptrend. It's got higher lows, higher highs. But if you were to buy the market here, you have to risk to under 196.70, the last low. Money is often one of the technical indicators I use, the amount of risk on a trade. That doesn't warrant it, so that throws that out as well. In the corn market, you now have 3 days in a row where you're over the upper Bollinger Band. It's a good area to be careful about. The most you typically stay is 5. If you look at the Bollinger Band and understand these black lines theory, you will trade within them 95% of the time. As a rule of thumb, I have a couple of different rules that expand this a bit, but the real rule of thumb I teach is that each of those days counts as one of those 5%. So now there's a 2% chance of the market staying over the upper Bollinger Band. That's a problem for the market because that band's lower than we're at now by a couple of cents. How do the two come together? Well, it'll be a mixture of the band going up tomorrow and then what do prices do? Number two, you're in an overbought condition. So I do think the market is broken out to the upside. I think the market has gotten ahead of itself because it's over the upper Bollinger Band, and the question is how much of a reaction. To end this uptrend, you have to take out 371.25, the current last break low, and yet there'll be good support in these bands around 375, the 100-day average. In the wheat market, you've now got 2 days in a row over the upper Bollinger Band. You're also the first time over again this 100-day average, and if you look at that green number, you can see for yourself this market, when it's been rallying up here, has been having a hard time with it. Now, eventually, bull markets get over that number, and they're good. Gold is an example of a market that got over that number, and it has stayed over it for quite a while now. So that happens. Are we rolling in the wheat out of this bear market? Our firm's fundamental traders think we are. The chart thinks you are, so a little different story there. In the sugar market, you're right now still, and by the way, I've moved to the October sugar now. You can see that you still have the embedded reading, so this rally is still in control of the bears. Absolutely, you have the swing line up, but you're under the 18-day average. The two fight each other. What rules the chart? The embedded reading. So I think the pros are willing sellers in this market until you lose that red line over 20. In the coffee market, you have an embedded reading now. So rallies in this market are still, I think, going to be controlled by the bears. And very important, look how this 18-day average, yeah, you get back to it, but you haven't been able to stay over it. So overall, the bias of this market remains bearish, and so does the slow stochastic. In the cocoa market today, you had a real good attempt at a breakout, and you failed miserably on this chart. You got up and over the 100-day, the 18, looked good, and then all of a sudden it gave it all back. If the market takes out 1971, it wipes out this chart pattern. You have no pattern then to trade. Right now you have the swing line with higher lows, higher highs, but because you closed under the 18-day average, the two fight each other, you have nothing, and momentum is absolutely flat in this market. In the cotton market, you finally have a bounce, a good bounce. So you have two things. Number one, you have an outside day up, a reversal day, if you will. Until today's low is taken out, the odds favor the market's going to try to add to that. Now, because you still have the embedded reading, you need that red line to get over 20. If you can close the red line over 20, I think price and at least the 100-day average at 77.70 are going to try to come together, and very possibly the 18-day average of closes. So I think with today's close, the bears have reason to still be bearish. The bulls have a ray of hope. It's a hard one to figure out right there. In the cattle market still has downside momentum. It's got the swing line pointing to higher lows and higher highs. That is bullish. That gets negated if you take out 122.80. A little bit of a confusing chart. The same in the feeder cattle. You have higher lows, higher highs. Same problem that's going in this. You know, if you looked at the feeder cattle and you saw what went on, the price counts that we send out to people on a regular basis, they were hitting the feeders, and the market abruptly stopped on this rally right into that number. It was quite fascinating because our people that do those numbers here were coming out and talking all about them. In the hog market, we still have a situation where China's very much in the market. The market hasn't also been able to get under that 18-day average for any period of time. The bias is up. You don't have a trend because you've got a higher high and a lower low pattern, and momentum is pretty much flat right here. Difficult chart at the easiest part of it. So you look at it all today. It's interesting. What you do with the day like today, that's the hard thing because so much is going on so late in the day. And of course, tonight we're going to hear about the Brexit and whatever that's going to do. But I want to remind you all about my charting course in case you don't know it. In my charting course, I teach everything you see here in detail, 54 videos that work with you and drive home the factors. Then the next factor that you're going to get is that not only do I do that, but in the morning you're going to get access to a video. That video is going to show you how to use and reinforce what you're learning elsewhere, how to put the whole program together. I write at least 2 updates a day, Monday through Fridays. Monday through Thursday are 2. Friday you get 1 in the morning, if not more, but 1 for sure in the morning. Sunday night I write again, and away we go into it. So you get the charting software, $99 value. Access to my market research, if you haven't had that before, that's a $60 value. The course, the whole thing, is just $99.95. But if you use the term IRA 20, take $20 off that. It'll come right off automatically. Type it into the coupon area. So the course is yours now for, yes, $79.95. Okay, I vary these prices, but I'm telling you something also. I'm going to raise the price of the course very shortly. So take advantage of it this summer. You want to get it, and it won't be with this price all summer. I said summer, but not meaning it's going to last that long on the discount. How do you get it? If you click up here, it's going to take you right to the form. If you go to our website under www.iraepstein.com, go to the education area, purchase the course, put in the IRA 20, away you go. What else do I have going for you? Well, you can always call us, 866-973-2077. I'm Ira Epstein. You have a good day. Take advantage of the course.